Good morning. Good morning. It is 9:12 Sunday, and right now I'm just looking over the market because the market will open up. This futures market will open up at 6. So, what did price do? Earlier we had talked about, live price going down into this low high. And what did price do? Price immediately uh-uh, price immediately just went up and closed quite high, and it kept going up, and then back into this imbalance from here. Imbalance meaning that there were a lot more buyers than there were sellers. So that's what the imbalance is. And price, I'm not going to say the price always go back into it, but price does go into it sometimes. It's a possibility that price can go back into that. It's just a marker. Okay. So you watch and see that. So that just goes to show you that that's another entry right here. What price do again? It went back into their liquidity right here, which is also liquidity, and it's starting to make higher highs. Higher lows, and it did make higher highs until it got so high that it started selling off. Let's look at the 15-minute because I'm going to show you guys where I caught a drop. So Thursday, it was, it was Thursday early in the morning. It was supposed to be early in the morning or late at night, and caught the move down. We have so this right here is consolidating. All of this right here is consolidation, meaning that there is a balance in buy orders and sell orders until someone steps in and moves money around. Somebody, or like a lot of people get into the market and everyone is like, sell, sell, sell. And what the market does, okay, is start leaving little hints. So in this area of consolidation, what you're looking for is some type of breakout. So we have our low right here, low right here. When we see this, we start paying attention to this candle right here. It didn't close strong, but it's okay. We look and see what happens next. Now we're finally at this level, and now we close strong right here, right? So that does create an imbalance, from a gap from here to here. That might be your target where price may be. Sometimes, like I said, price does not always go into that imbalance, their fair value gap. So what you can do is you can still get in on the action. And this tells you right here, this strong close. That is a strong close on a 15-minute, guys. That is an absolutely very strong close. Then you wait for the pullback. If you're here and you're watching it live, when it closes, you wait for the pullback. Now, guys, if you see it close here and you're here and you're just like, oh, I don't know when to really enter. Don't enter like right here when it's live, because when you're entering on a candle and the open up candle, you're entering while price is in the middle of nowhere, while price is deciding. So what you do is you wait for the candle to close and you wait for the pullback, okay? You wait for the pullback. This is an indication. This is something you should be looking at, to seeing what it could reach for. But this tells you right here, the market is telling you a sale is about to happen, a sell off. And it did. It happened. But do not enter when price is in the middle of nowhere. Expect the pullback. Okay, the pullback happens a lot. And it does that so it can catch people who are entering quick. Stop doing it. And where did price go? You see, price went back to here. These lows right here. And this was my exit. Okay, starting out, guys, you start out with a small account. Start off on a micro. Do not over leverage. Don't get into this market and just start doing 5 contracts. And no, you need to slowly see your progress. 1 contract, max 2 trades. If you lose 2 times, you're done for the day. And with top step, you can lock yourself out. So if that's what needs to be done, lock yourself out for the rest of the day, because the trading day ends when the market closes at 5, 4 or 5, whatever. You want to have money. You want to have green. You want a green day. And you'll see that when the market closes at 5 and it starts all over again at 6. So before the market closes, you want to have money in that account and you want to have a green day so that you'll be able to see, wow, I ended the day with money, even if it's just $15. When you're following your rules, you'll get it. If you didn't catch all of that, you're somewhere in this time zone that you can be looking for. Do not get into the market. What you need to be looking for is an A plus setup. Follow your rules. So if you just so happen to see price go back into this right here, that was your indication for a short to here. If you missed out on this move down here, opportunities repeat itself. So do not get discouraged and do not rush the market. Don't rush yourself. Do not anticipate, because you're going to you need to just focus on your setups, focus on your rules, and be consistent with that. For your stop loss, my stop loss is from, I don't go over 45 points for my stop loss. If it hits 45, I let it hit my 45 and then I keep rolling. Okay, if I see that it's going back in my favor, if it's going back in my favor, then I'll wait for the next opportunity to present itself so I can go back in the market. And guys, I want you guys to know something. When you start making an impulsive decision, and you made an impulsive decision, because your heart starts racing and you might get the urge to revenge trade, just sit back, take a deep breath, and tell yourself you're not going back into the market until you see another setup. That's it. Take a deep breath, go over what you did wrong. If you're following rules and you did everything you're supposed to do, that's fine. Just still take a deep breath and know that your setups do work. They're not going to work every time because the market is unpredictable. But if still you know that your edge works, so you consistently work your edge. Just do not get emotionally attached or involved. That's when you'll start going down a hard path that's sometimes hard to recover from. The setups are there. Just execute. Stop hesitating, stop second guessing. When you see your setups executed properly, let it hit your take profit, let it hit your stop loss, take a deep breath. Everything is A-OK. And if it's not okay, just know it's okay. I have a video if you guys want to see how a person can be so calm. I recommend watching this podcast, Aspire, with Emma and her husband. I forgot the title of the episode, but he struggles with anxiety, but he's such a very calm person. So if you need, some reassurance and knowing that it's okay, guys, okay? It's okay. So it's more so okay when we learn that we do not need to over leverage. When we start over leveraging, we're putting pressure on ourselves. That's not true. Yes, it is true because now you're like, I had to make this certain amount of money in a certain amount of time. And don't do that. Do not put pressure, unnecessary pressure on yourself. Take your time. Nobody is rushing you but you. Okay, so what I'm looking at right now is I'm trying to see if there would be a break in market structure because the market has been going up and going up. And whatever Trump is doing, everything is going up. I mean, everything is going up. So price has been coming down. We have been targeting lows here, our high lows. The market is starting to come down into it. So then we watch, is this a liquidity grab? Because in order for prices to go high, the buyers need sellers, you know, people have to sell in order for the people to buy. Because if you're a buyer, you want to buy low, you want to buy low, you want to buy low, you want to buy low. So in order to do that, you're going to have to let the people sell. And you too can get on that path and you can sell. You got to know when to sell. That's why we were selling up here. But our job is to just flow with the market. Okay, we're not the big money that make price move. You know, we are riding the wave. That's all we need to do. That's all we need to do. Why? Because the people, they put themselves in the market and they create the market, and we see what we do is we see what the market creates and we flow with it. Okay, that's all. That's it. So this is the close. Usually on a weekend open, you just kind of I mean, you can anticipate like it's been so many sellers that the market might open up down here because the people were selling to trick people into thinking that the market will continue going down. Now, this isn't all the way true, but this is just something that I heard Mark Douglas say in a seminar. He was saying that a trick people used to do was that at the end of the close, they will make price go down, tricking people. So when over the weekend or over when the market was closed, the people they would be putting in their orders, retail people be putting in their orders for a sale. So you might see the market open up down here. And really what that is going to do, first of all, if it opens down here, there's a huge gap is going to close. And watching the market, see what it does, price can accept higher. I mean, this market is just going up, up, and up. Okay, guys. But we have to do the work of not over leveraging, because anything can happen. Someone can put a ton of money on something and it can completely wipe you out, especially if you're in this trading range right here, this 9:30 to 10:30, because 9:30 the New York market opens, okay, and price is so volatile. Its price is doing a lot of moving because the market just opened up for them. That is not really the best time to trade. If you know how to trade that, you can trade it. I can't tell you can't do it. All I'm saying is just starting off like I did. I made a rule: no trading from 9:30 to 10:30, because when I was trading at 9:30 trying to trade and before I got ready for work, I will be stopped out every single time. And I lost money and I blew my account There's no need to do that if you create strict rules for yourself. My rule was no 9:30 to 10:30 trading because I needed a rule because I was just functioning without rules and I'm just acting impulsively. One trade I did, money was fluctuating so much. I was on regular NQ. I wasn't doing the micro. Price was fluctuating, so I was getting 1,000 and then I was losing 1,000 and then I'm biting my nails. My heart started beating so fast when I saw the money go up. And you know what I did? I was waiting for money to keep going and keep going, that I let it hit my stop loss. Real stuff. So it's important to be calm. Follow your rules. If you don't have rules, well, one day you're gonna get your ass kicked enough where you're just like, something's gotta change and I need some rules. If the market opens up here, then that really means price is really accepting higher. Okay? Price is accepting higher. It's gonna go. It's gonna go. It happened last week. I don't even It happened last week. Okay, Friday, Sunday. Right here. Oh, this is not the one I was talking about. I don't remember which one it was, but for the weekend, price just was above it and it just went high. Like there was no even closing the gap. So that's what we have for Sunday, early morning Sunday. The market will open at 6 o'clock. And from 6 o'clock, we would just be watching. And I don't mean watching just sitting down in front of the market, just watching that. That is emotionally draining. That is mentally draining. And you're not going to have enough mental energy to really make a good trade. Like trading does not have to be watching the market 24/7 because the majority of the time there are a whole lot of people trying to enter the market. All you need to do is check in it sometimes and see what it's doing, what it's creating. If it starts creating an imbalance, you notice that it created an imbalance an hour ago. An hour later, you're able to see that price is still below this thing. You didn't miss out on anything. The market is still creating itself. You have to let it create. So you make the marking of the gap that it made. You make a mark. Price is all the way down here. This is how you trade. You wait for it to go here. You don't chase it when it's all the way down here. It's probably just grabbing liquidity. If you're all the way down here expecting it to go lower, you're going to be mistaken. You're going to become liquidity, because that's what it does. Okay, this is like this because there were a whole lot of breakout sellers down here, and what did price do? Price immediately rose above because it was just there to grab liquidity. It's just there to take money, and the buyers had some sellers, and the buyers kept going. All right, so that's what we have here for the Sunday. This is CEO Shy of Trading with Trust, and I mean, shoot, it's a whole nother week. Let's get into it.